Robinhood reported really phenomenal results last week. Everything is moving in the right direction for the business. I think strategically, and this is the way that I'm looking at Robinhood more than just what were the numbers from a revenue perspective or net income perspective. I'm looking at how many gold members do they have? How many assets are coming onto the platform? What is the average asset value of the customers that are now on Robinhood? Those are the things that are moving in the right direction. So I'm going to dig through the results and show exactly my takeaways, which may be a little bit different from the market. Now, I am going to end with valuation. This is a stock that is getting very expensive. It's worth acknowledging. It wouldn't be surprising if there's some sort of pullback, especially if there's a pullback in the market or any sort of blip in the results over the next few quarters, but that's not what we've seen yet. Now, my name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's dive right into the numbers. Here's the high level overview that management gives for us, and they start with a lot of the really important numbers. Funded customers. This is not actually growing all that quickly, everything considered. I would actually like to see this number pick up in 2025, but we'll see how that goes. It is a very sticky business, so that's good on the downside. You're not going to lose customers at a really rapid rate, but are you going to be able to track them faster than 1.8 million per year? That's going to be the question for Robinhood going forward. But a really solid growth in the fourth quarter, 850,000 new customers sequentially. Assets under custody up 88% year over year. This is partially because crypto has done well, partially because the stock market has done well. So existing assets are going to grow into more assets later in the year, but there's also assets added to the platform. That is the net deposits that you see here in the bottom right, $50 billion over the past 12 months of net deposits onto the platform. So all three of those things moving in the right direction. What I'm more interested in is gold subscribers. And I have talked about this a lot on this channel. The reason that I think gold subscribers is a really good indication of the health of Robinhood's business is it's what differentiates Robinhood from other brokerages. Robinhood can look at this subscription a little bit the way that Costco looks at their membership. So Costco makes its profit on their memberships. And then they can run each one of their stores basically at a break-even level. That gives their stores completely different economics than you have with a lot of their retail competitors, where those competitors have to have a higher gross margin to be able to reach the same level of profitability. Robinhood can do the exact same thing, offering things like a 3% IRA match, 3% back on the gold card, the gold credit card, more data and research, better margin fees. These are money-losing propositions in and of themselves for Robinhood. But if the trade-off is there's going to be now 2.64 million customers who are paying $50 a year just for their gold membership, that's going to be a positive trade-off for the company long term, because there's other ways that Robinhood is going to be able to make money if the assets on the platform continue to grow. So again, this makes their business model a little bit different than competitors, and we have to judge it a little bit differently as investors. So all of that said, now we can look at some of the traditional financial metrics. Revenue, just phenomenal growth in revenue, now over $1 billion. That was up 115% from a year ago. So everything is moving in the right direction from a revenue perspective, and they are keeping their operating expenses not flat, but not increasing them nearly as much as revenue. That's operating leverage. So just up 18% from a year ago. That means that adjusted EBITDA and net income are both going to grow tremendously and grow far more than revenue does, because of that operating leverage. So adjusted EBITDA up 361% from a year ago. Net income up $886 million. I will note that there was a tax benefit of $424 million. So even after you pull that out, $492 million in net income. Just phenomenal results. And again, this is all because of that differentiated business model that Robinhood has. I also think it's worth touching on some of the things that are going to drive Robinhood over the next few years. Their product velocity. So this is the products that they're introducing, the ways that they're expanding their market. There's a lot of different ways that they can expand their market even further in 2025 and beyond. This is really a decade-long product roadmap, if you will, and different places that they can expand geographically as well. So you added Bitcoin ETFs, added index options. Robinhood Legend was introduced in Q4 2024. Added more products in the crypto market. Lots of things were added in 2024, and the roadmap for 2025 is going to be more of the same. More wallet share from the next generation. So gold card expansion, they said they only have about 100,000 of those users. That's going to increase in the future. Legend, futures rollouts, event contracts, And then crypto and tokenization. We'll see where that goes in the future. But if we can tokenize more and more assets, that's going to be a great thing for the market long term and for Robinhood's business long term. So all of these things are in service of expanding the platform. If you only have one product and it's a really great product, that's the way that Robinhood started, that's great. But if you can expand that platform and serve everybody's financial needs, increase that wallet share, that's how you're ultimately going to be a much, much bigger business, a 10x business from where we are today. The other thing that I wanted to highlight is the maturation of Robinhood's business. This is the retirement assets under custody. That was the number of accounts was up 2x, but the retirement assets under custody was up 7x over the past year. This is Robinhood getting into the kind of businesses that are going to be multi-decade runways for the company. So this is exactly what you want to see. It's also increasing the assets per account. So you're maturing as a business, attracting higher and higher net worth individuals. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, I do think it's important to disentangle the business from the stock. The business is doing extremely well. I love what Robinhood is doing. I love the momentum in the business. I like the things that are coming to expand wallet share and all the services that they're offering. I think these are multi-decade tailwinds for the business. But all of that said, the stock is very expensive. Current $2.95 billion worth of revenue over the past 12 months means that shares are trading for 20 times sales. The price to earnings multiple on a trailing basis is over 40. So this is a company that is still priced for perfection. That doesn't mean that I am selling the shares that I own. I'm absolutely not. But I'm also not buying at this point either, because any sort of blip in operations or blip in the market is going to mean that there's probably going to be some sort of pullback. I just think there's going to be better opportunities to add more to my Robinhood position. This is getting to be one of the bigger positions I have in my portfolio. And the way that I'm looking at it is I'm willing to ride that out, but new capital isn't going to go into a company that doesn't have quite the same asymmetric upside at the current price as it did when I was buying shares in 2024. Doesn't mean the business isn't doing great. It absolutely is. But the stock has been on such a tear that it's gotten much more expensive than it was a year or so ago when I started buying shares of Robinhood. So hopefully that's helpful in understanding exactly what's going on with the results. Everything is moving in the right direction. I love seeing the gold numbers increasing. I think that's the kind of product that is going to get stickier and bigger over time. Really gives them the ability to have completely different economics than most of their competitors in the brokerage business or in financial services in general. That said, still a very expensive stock. So love to get a better opportunity as a buyer, but that would mean likely some sort of slowdown in the market, which probably will come eventually. We just don't know when that's going to come. That's why I'm going to ride out what I have today. But let me know what you think about Robinhood's results and their share price. Is it too expensive for you? Or are you a buyer? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.